As of about 10 minutes ago, Tesla and Ford just entered into a partnership. Yeah, I didn't see that headline coming either. We're going to give you guys the details on this breaking news story, get you guys caught up to speed as Tesla investors. Is this a good thing? Is this a bad thing? We got all of that for you. But on top of that, I want to talk about what is currently happening here in the markets. You're going to get big economic data tomorrow that could really shake things up. You're going to get inflation data. You're going to get consumer data on top of what we got today, starting to paint a pretty bearish overall outlook on the economy slowing down, on inflation remaining far too high. So we have a jam-packed video for you. Let's get into it. First off, I want to start this video with this partnership breaking news that is coming out. As you can see, this did push Tesla stock higher by about 1% here in after hours, which is billions of dollars on a market cap basis. So investors initially are taking this as good news. What's going on here? So Ford EVs will use Tesla charging tech in surprise partnership between rival automakers. This article just came out after the bell today. Now it says Ford will partner with Tesla on several charging initiatives for its current and future electric vehicles in an unusual tie-up between the two rivals, CEOs of the automakers announced Thursday. Under the agreement, current Ford owners will be granted access to more than 12,000 Tesla superchargers across the US and Canada starting early next year. Ford's next generation of EVs will include Tesla's charging plug, allowing owners of Ford vehicles to charge at Tesla superchargers without an adapter. Now, for a couple reasons, I think this is good news. Kind of look at this like AI and NVIDIA. NVIDIA is seen as the pickaxe and shovel component of AI. It's like the literal pickaxe and shovels of the gold rush. Those were the individuals who did well, who were at their stands selling pickaxes and shovels. With EV vehicles, imagine if Robotaxi did not become successful and the AI part of Tesla never caught on. Charging these vehicles would be the pickaxe and shovel industry or segment of electric vehicles. So what this tells me more than anything is that Ford is likely not going to pursue their own charging network for their vehicles for at least the foreseeable future. And I think that puts Tesla in a really good situation. It will add incremental revenue, obviously, over time as more EVs do come online. And that's a more recurring business. You have to charge your EVs. So I think that is fundamentally positive. Now, we don't have a lot more information besides that. So we'll wait and see if any new details do come out. But I also want to leave you guys with this as well. Tesla is about to advertise. That is going to be a game changer for Tesla. I think right now people are going back and forth. Is Tesla going to be able to produce on their 1.8 to 2 million vehicle target for 2023? Or are they going to miss that? Or how much would they exceed that? I think advertising is something that is very much underestimated on Wall Street. And that's a big reason why I'm so bullish on Tesla over the next 3 to 6 months. Tesla has never advertised before. And while if you're an investor in the markets, if you're keen to Wall Street, you know about Tesla. Generally speaking, if you don't own a Tesla, you don't own Tesla stock, but you invest in the markets, you probably have some concept or idea on what Teslas are and what kind of technology they have, at least at this point. But the average citizen in America or globally does not. They don't know that Teslas are one of the safest vehicles you can drive out on the roads. They don't know that a 20-minute charge can give you days worth of mileage driving. People don't know these things. And I think that's where advertising, like Elon said, can be very educational and entertaining at the same time. You're going to reach a new demographic that has not been exposed to Tesla. And I think that will drive massive sales numbers for Tesla in the second half of this year. So, Wall Street, and why I'm talking about this now, Wall Street, they like to see things in advance. That's why Nvidia is almost $1 trillion company. They do like 15 times less revenue than a Google does every quarter. But people expect Nvidia's revenue to grow exponentially. Same thing with Tesla. If we expected their sales to grow massively because they are now going to advertise, well, you would want to be in Tesla as soon as possible. Now, this is not a recommendation. Do whatever you guys want. I'm not a financial advisor, but one thing leads to another. I think advertising leads to more sales, which markets will catch on to. And I think just the announcement of advertising from Tesla when they do start that campaign and get some of those results, it's going to be a pretty big deal for Tesla stock. So one reason why I'm bullish on Tesla right now. But there's always got to be a but. Stocks have rallied a lot in 2023. They could come down, Tesla included. Tesla's not at its 2023 high like a lot of other companies, but everything's kind of rallied in the land of big tech. Now, this market seems ever more vulnerable to something happening. Whether it is a default on the United States debt, whether it is a downgrade, whether it is just the flat out economy worsening or inflation revamping. You've priced in a lot of good news for this market so far. I think it's safe to say the returns throughout the rest of 2023 are probably not going to match the first half of 2023. So let's talk about some of the data that came out today. Initial jobless claims for the week of May 20th came in at 229,000. You were expecting 245,000. Labor market stronger than expectations. GDP price index quarter over quarter, the second estimate for Q1, expected to come in at 4%, came in at 4.2%. Economy stronger than expectations. Corporate profits came in at negative 6.8%. Forecast was negative 1.3%, worse than expectations. GDP growth rate for Q1, second estimate, came in at 1.3%. You were expecting 1.1%, better than expected. Chicago Fed National Activity Index expected to come in at 0.2, came in weak at 0.07. Real consumer spending, quarter over quarter, expected to come in at 3.7%, came in at 3.8%. Inflationary. GDP sales came in at 3.4%, expected at 3.4%. So right on expectations there. Core PCE prices, quarter over quarter. This got revised from 4.9% to 5%. Again, inflationary. PCE prices, quarter over quarter, came in at 4.2%, expected at 4.2%. Oh, I'm going to leave that in the video. Excuse me. Pending home sales year over year, expected at negative 19%, came in at negative 20.3%. Bad for housing, but not too bad. It's still kind of around expectations. Pending home sales month over month. This is the bad part, I would say. Expected at 1.4%, came in at 0%. You also had Fed Collins that spoke today. All Fed members essentially have been along the same lines, staying data dependent. That's kind of what they've said over and over again. Now, Kansas Fed Composite Index, you were expecting that to come in at negative 14. It came in at negative 1, showing economies much stronger than expectations. Kansas Fed Manufacturing Index, this is a real winner. expected at -27, comes in at -2. Much stronger than expectations. 8-week bond auction, previous yields were 5.02%, came in at 5.35%. 4-week bond auction, previous was 5.37%, came in at 5.75%. 7-year bond auction, last bond auction we had for the 7-year was 3.56%. This one came in at 3.82%. You were seeing yields going higher today. That's bad for technology. Typically, that would be bad for the markets. But you had NVIDIA with, quote, guidance for the ages that sent the markets higher. NVIDIA typically does not have a huge impact to the markets, but it's AI. It's the pickaxe and shovels of AI. And NVIDIA just blew all expectations, just blew them all up. Analysts were expecting 7.2 billion in revenue for the next quarter. They said, hey, we're going to do plus or minus 2% on $11 billion of revenue. Still, I mean, the stock is grossly overvalued, but when estimates are that far off, you're going to get a 20+% rally in the stock. And AI has been affecting the largest segment of this market by market cap, your big tech companies. So all of them rallied. A Microsoft up 3.5%. That's insane. NVIDIA, Apple up over 1%. Google, Amazon all having good days. It sent the NASDAQ up about 2% today. So that's what kind of counteracted some of this bad data here. Now, tomorrow, you're going to get durable goods orders month over month for April. This data coming in at 8:30 in the morning. You're expecting negative 1.1%. So some weakness on durable goods orders. Kind of when a company makes an inventory request, that's kind of, or trying to purchase something at wholesale. That's basically what this data is. Core PCE price index month over month for April. You're expecting that at 0.3%. Last month's reading was 0.3%. If this goes higher, you're going to have a problem. This is one of the big data points the Fed is looking at to see if they should raise rates again or pause. Personal spending month over month. You were expecting that at 0.3%. Last month's reading was 0%. So you're expecting some growth here with personal spending. Personal income, you're expecting that at 0.3%. Last month's reading was 0.3%. So you are still expecting pretty good retail numbers here, right? Pretty good personal income, pretty good personal spending. The higher those are, the worse it will be for inflation. And the lower durable goods orders is, the better it will be for fighting inflation. Now, you're going to get PCE price index month over month as well, expecting that at positive 0.2%. Last month's reading was 0.1%. If you get these numbers again shooting up, that's not going to be good whatsoever, right? That's the last thing you want to see, is inflation going higher as economic data looks like it is getting worse. PCE price index year over year, expecting that at 4.1%. Last month's reading was 4.2%. So a little subsiding on the year over year PCE numbers. So that's what you have tomorrow. Another thing that could be important is the Michigan Consumer Sentiment. The final survey for May comes out tomorrow as well. The inflation expectations are really the things to watch the most. The 5-year inflation expectation came in at 3.2% last time around. Look at this little chart here. It's been going higher from 2.9% to 3% to 3.2%. Inflation expectations getting unanchored would be this chart continuing to go higher. So if this gets revised up, that's going to be very bad. 1-year inflation expectations, again, went from, what was the 1-year inflation expectations? At their lowest, they were at 3.6%, shot up to 4.6%. went down to 4.5%. If this gets revised back to 4.6% or 4.7%, you're going to see a very clear and obvious uptrend in inflation expectations. That would be a very negative sign for this market. So that's really what we have. Now, I think one of the biggest things, obviously, the markets are contending with right now is the debt ceiling. Now, the debt ceiling, let me be real here. We're not going to default on our debt. If we do, we got bigger problems than anything else. Screw the AI bubble. If we default, everything's coming down. Markets could fall 40-50% from here if we were to default on our debt. And we're waiting on new updates. The key points of this article says negotiators move closer to a debt ceiling deal with just a week to go before the U.S. government faces a potential default. A warning from the Fitch credit rating agency about U.S. debt added fresh urgency to the talks between the White House and congressional Republicans. Quote, "We're at a very sensitive phase with sensitive issues that remain," said GOP Republican Patrick McHenry, one of the negotiators. And there's weird headlines coming out from this. Some people say talks are productive. Some people say we're far apart. Some people say this is going to be a Biden default. You know, there's a lot of mixed opinions here, and there's a real lack of clarity. Now, obviously, defaulting would be bad, but last time we got downgraded, like Fitch just warned we could get downgraded soon, the S&P fell about 6.5% the next trading day. So even if you pass a debt limit increase, if you get downgraded, you could still see the markets fall. In 2011, when you got downgraded, markets fell over 20%. It was pretty ugly. So these are things that I am watching. That is the update here with Tesla stock. If you made it to the end of this video, consider hitting that subscribe button and liking the video if you did not somewhere in this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.